Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, October 15th. We do got a bit of economic news releases to go over today, so we'll jump right into it. So we'll start off with the weekly jobless claims, which we had 262,000 people apply for unemployment last week. Forecast is supposed to go upwards to 70, and actually went the opposite. It dropped 7,000 to 255,000. So good news. We seen less people applying for unemployment. We also got the consumer price index. This is the inflation numbers on, which is a high impact type of reading here, and we had a negative 0.1 back in August, and so the forecast was supposed to dip 0.2%, and it did. A lot of this is being contributed to food and energy, so with the volatility. So if you strip out the food and energy, this is really what the Fed will look at, and this is the core CPI. Their favorite gauge for inflation is really the PCE, but they do look at the CPI as well. And with the CPI, we had a 0.1% back in increase, and that was the same forecast that was going to continue that, and actually went up 0.2%. So our year-over-year went up a little bit more than higher than forecast, which is a good sign because we need right now inflation is way too low, and this is a good sign that inflation is getting a little bit higher. We'd like to see it more in the 2% range, where we've been actually in the low 1% range. Empire State Index, this is the manufacturing in the New York region. So as you can see by that negative number, it's contracting, or it's pulled back a bit on the manufacturing in that region. So previous in September last month at 14.7. Index was supposed to drop or improve to 8.3. It did improve a little bit, but not quite to a forecast at 11.4. Same thing in the Philly Fed region. This is the manufacturing in the Philadelphia region. We had a negative 6 back in September, and it was supposed to improve to 1, and improved not quite, didn't meet the expectations. It came in at negative 4.5. So not so good. So a little mixed news here. Consumer price index, good to see the inflation going up. Weekly job numbers coming down, which is good. But on the manufacturing region for the East Coast, not so good. Markets up. They're rebounding a little bit after a bit of a beating yesterday. So today is kind of more bad news is good news, so to speak. We do have a few members speaking out today. They'll be out there, so that could depending on what they say, especially about interest rates and that nature, could move the markets today. So be cautious of the Fed speaking today. Also, the Fed Base book came out later in the day yesterday, and there were signs in there that there are concerns of where the economic recovery is at. So that's one reason why the bad news is good news today, because obviously if the economy is not going to do well, that means they're not going to raise the rates. So they need to keep that stimulation in there, or keep rates lower and inflation in check. So they need to, so keep an eye on that. Let's take a look at the bond market, and we had a nice little rally yesterday. We did pull back a little bit today. We're up, but we're down about 3 basis points from where we left off. So it's not enough for a price change. We're basically at the same price where we left off yesterday. All right, folks. So not a bad day today so far. Again, tomorrow we'll have some more economic news scheduled. And just be a little cautious today with the Fed speak, as they can drive the markets today. They are looking at earnings reports as well. So yesterday we had the Fed Base book that kind of drove it, and then Walmart had really disappointing numbers yesterday as well. All right, you guys have a wonderful day. Thanks so much for watching, and we'll catch you guys tomorrow. Bye-bye.